Good morning, ladies and gentlemen, to the lovely Tuesday. I hope you had a great day yesterday. I had told you stay positive, stay long, and given you lots of buy calls as well. Hope you made some money in yesterday's trading session. So, welcome to Ask Abhishekraj Morning Dossier. I'll quickly gear you up with all that you need to know in today's trading session and how you should be planning yourself. Remember, after a good downtrend, markets have given a lovely bounce. So, this is the point when you should be preparing yourself for the bigger picture. There are two possibilities. Either this particular bounce is a retracement of a downfall, or markets could be preparing for a positive rally. So I'll share some great things because markets are reaching into very interesting zone. It's going to be very amazing and interesting. So be precautious, take your hedging bets, prepare yourself, plan yourself. We could be awaiting some good movements, and don't forget this is October is closing up. So Octobers of leap years are usually extremely volatile. So plan yourself accordingly. So let's get back to the data and see what we have in the data from yesterday and how you should be planning for today's trading session. Starting with the fund flow, it's kind of you can say neutral, not too much exciting, but it's kind of turning neutral to positive. Number one, FII sold only about 26 crores in cash market, wherein foreign domestic institutions bought about 542 crores. Understand this. Until previous sessions, FIIs had been selling. Now their selling pictures have selling numbers have got very minuscule. It's kind of selling pressure had decreased. Plus, they are now short covering. Now the buying figures that we have in futures is they bought stock futures about 777 crore. They bought index future worth some 700 crores in yesterday's session as well. They had index futures long and stock futures long. Now if you look at the rest of September, they had been selling into derivatives, they have been selling into futures. So these buying numbers that we have in futures, most probably these are the short covering numbers. That's why we see the volume. We'll talk about the volumes as well. So on stock options, they have bought about 80 crores, and index options were bought about 425 crores. Now, if you look at the other indices like banking, auto, financial services 2550, plus IT, media, metal, pharma, PSU bank, private bank, energy, reality, they all closed positive. So it was a kind of broader market participation. Overall, the entire market capitalization went up. Looking at the other things, volatility fell for the second consecutive day over 5%. Markets on charts are still weaker, however, they are reaching important levels. I'll discuss about that when we discuss Nifty and Bank Nifty charts. Volumes were a little lower in comparison to yesterday's trading session. Now, as I said, Nifty is approaching a very interesting price levels. So I'll share it into three phases. Okay, so three phases. Keep a watch, listen to me carefully. This is going to help you plan yourself in coming trading session for the entire week and even the times going forward. Now this is the retracement, Fibonacci retracement level of the entire fall from 11,800 levels. So Nifty broadly has crossed the 38% retracement. Now the 50% retracement is placed around 11,290, to be more precise 11,300 in round figure. You can say post that we have 11,400. So unless and until we go above 11,410 levels, this entire fall would not be reverted by over 61% retracement, point one. So now if you look at the swing, the swing lows, swing high was 11,600, then we fell to 10,800. So if you look at this particular swing of fall, Nifty has already retraced above 50%, and next retracement level is 11,307. Remember, on the previous picture we have 11,300. Here we have 11,308 again. So it's kind of 50% retracement of the overall fall, and the 61% retracement of the swing fall. It's somewhere around 11,300. This is a very important price range. Why? Let me show you on the next slide. Now, if you look closely, this is on this particular chart where you see green line and red line. Red line is 50 days moving average, green line is 20 days moving average. And the white lines that you see, they are different trend lines. Now, if you look at the bottom trend line, Nifty first went below it, but again in Friday's session it took support on the trend line. Now in today's Monday session, it crossed one more trend line, and now it's reaching in the price range of 11,300. That's the 50 days moving average. Plus we have another trend line placed around 11,350, and again we have 20 days moving average. So it's kind of 11,300 to 350 is very, very important. This is a big hurdle place. In case this is just a retracement, Nifty is not going to cross 11,350, and in case it crosses, protect your short positions. I would suggest exit your short positions, or at least stay hedged. So that would be all on Nifty. Now taking a look on Bank Nifty, this is the daily chart. Bank Nifty is yet to reach its 38% retracement, that is placed around 22,270, followed by 50% retracement of 22,800. So Bank Nifty is now on the daily chart. If you look at previous 2 days, on Friday Bank Nifty did fall a little bit, but again it did not break the Thursday's low. Point 1. Point 2, it made a hammer pattern on the daily chart. Point 3, today in Monday's session it opened and closed both above the hammer pattern, so it's a kind of confirmation on the hammer pattern. So point 1, minimum Bank Nifty should be testing 22,270 levels. In case it continues up, be positive for now. However, any aggressive longs, I would suggest only if the 50 or 61% retracement is taken off. So Bank Nifty and banking stock should be on your radar in case we see any weakness in before the markets start going up, or in case Nifty fails to hold or fails to go above 11,350 levels, or it takes any resistance in that particular price range. This is the index, and this is the sector where you should be keeping your short positions. Now, why am I emphasizing this? 2 reasons. Very simple. The broader market, that's Nifty, when it fell, it took support on 200 days moving average. Now on the other side, when markets were going up, Nifty was already above all its key moving average. However, Bank Nifty took resistance on 200 days moving average, that's 25,000 range. So bottom line is Nifty took support on 200 days moving average, so that's a long-term bullishness confirmation, and Bank Nifty took a resistance on 200 days moving average. So on these 2 indices front, Nifty took support at 200 days moving average, Bank Nifty took resistance on 200 days moving average. So what I'm trying to say is 2 things are confirmed. Bank Nifty would stay kind of weaker or at least underperform Nifty, and Nifty is bullish for now, maybe due to contribution from other sectors. Rest, keep a watch on numbers, because so far we have not yet gone above 61% retracement. So for now, the most important price range for Nifty that's going to drive the entire market is going to be 11,350 range. So that would be all from the indices front. Now let us see how you should be planning yourself in other sectors. Nifty, as I said, it's positive until it's trading above 11,100. Longs at this point of time, risk reward is not justified, so no trade. Bank Nifty is positive, no trade. Reason is the same, the risk reward ratio is not justified. Metal index view is positive, you can go long in case the index crosses 2245. Nifty IT, in case it goes above 19,850, we may go long. Last session was a dragonfly doji, hence view would be post today's closing only. So IT index is showing divergence on daily charts on RSI, plus we have lots of monetary policies in coming few days, so I would suggest avoid IT for now. Pharma positive, buy on dips. Energy positive until it's trading above 14,950 index levels. Auto is positive, find longs and stay cautious, as we have auto sales numbers coming up in coming 2-3 days, so take your precautions. Now these are your stocks that you should be looking at. For short, once again, I'm not sharing the trades because the only sector that looks bearish, or there are two sectors that we will be keeping on our radar for short positions. One is metal index and another one is banking and financials. But again, that would happen only in case we see some bearish reversals on the charts. Until then, I'm sharing the long stocks that you should be focusing on. So you can go long on ESCORTS above 1209. Stop loss would be 1145. Targets would be 12.7 to 1350. It's basically continuation of yesterday's trade that we had, which did massively well. Asian Paints buy above 1956. Once again, it's the same trade from yesterday's session. Now the stop loss has been modified to 1930 instead of 1900. Axis Bank is a buy on dips with stop loss 717. Biocon is positionally positive. Eicher Motors, continue your long position that we had yesterday. Hindalco, go long, stop loss 160. Maruti can be you can go long in Maruti with stop loss 6600. You can go long in Zeel with stop loss 195. So that would be all in today's trading session. Hope you have a lovely day ahead and a profitable trading day. Thank you so much for watching and listening. Don't forget to like, share and subscribe and comment, plus ask me anything that you may want to know about your investments or investments plans. So thank you so much. Abhishekraj signing off. Stay healthy, stay wealthy.